And good afternoon. This is Dan with your weekly review and outlook brought to you by the Derivative Technical Analysis Program here at Van Ahn & Company. This is episode 10 here of our weekly review and outlook, where we like to discuss primarily charts in our main contracts that we focus on here in that DTAP program. We also like to look at those charts from a contextual view and also drill it down to a little bit more of a daily perspective for you guys as well. Before I get too far into the weeds here, just want to start by saying past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and or investors, and this is a solicitation. Now that we have that disclaimer out of the way here, again, we'll kind of get started with coming into the outline here for today, October 7th, 2021, Thursday. We're recording this here about 1:30 in the afternoon on Thursday. We like to, again, come to you from a weekly perspective once a week here. When we're able to see kind of the contextual view of a few of these charts, we can then come to a conclusion, and if we need to make any decisions before the weekend, it gives us Friday tomorrow coming in to make those decisions before the weekend, and then kind of start to look forward and into the next week. So per usual, we'd like to go over our economic calendar first. I'll kind of touch on a few things, go over our technical quick sheet, and just kind of give a few different updates there. In the financial realm here today, I want to talk about the Russell 2000, and we'll also talk about corn here, December corn chart. We'll go through in the meat complex, December live cattle, and then energy complex. We'll talk about that natural gas market that has been, quite the wild contract to say the least. And then we'll finish up in the metals market with that silver contract. We'll just change screens here for one moment here. Get you over to our economic calendar first. Coming into tomorrow, it'll be Friday, October 8th. We do have a few different economic reports that could have some decent, decent catalyst type expectations for the outside markets, primarily like your financial indices. So we're coming in and looking at non-farm payrolls tomorrow at 7:30 Central Time here. We have unemployment and employment change here. Both of those very key for us and Canada here, so kind of keep that in mind here. The Fed is certainly looking at a lot of those numbers coming in as far as when to start tapering, when to kind of control the taper curve of their purchases of assets here. We also get, as a reminder, every Friday afternoon, CFTC comes out and releases the speculative positions, so commercials, hedgers, as well as spec plays in the market, where they're sitting in terms of contracts, and that will be as of Tuesday of this week. So again, Tuesday, a couple days ago, that is when those numbers will be current on the report that drops tomorrow afternoon. Fast forward to next week here. Just bear with me one second here. Coming into Monday the 11th, really, pretty quiet session overall. We do have, it's more or less a bank holiday with Columbus Day there on the 11th, so keep that in mind in terms of a bank holiday. Coming in on Tuesday, again, very quiet. We have a 10-year note auction, middle of the day, that tends to have a little bit of weight now on the financial side of things. Coming into Wednesday here, we have CPI, core CPI, and then OPEC monthly report in the United States here. In China, we also get their CPI and PPI numbers. Thursday, again, core PPI, and then PPI for the US, and then manufacturing sales in Canada. So if you have any interest in that. And then Friday of next week, a little bit more loaded in the morning there. Export price index, core retail sales, trade balance over in Europe at 4 in the morning if you really want to get up for that, and retail sales around that 7:30 time frame for us here. So pretty quiet, I would say, overall next week. We will, compared to this week, we did have a little bit more coming in, especially tomorrow. But overall, economically, we have a pretty quiet week coming in next week. Switching over to the quick sheet here for us. Nothing too crazy to update in terms of just changes overall. If you guys have any questions on just posture ideas, recommended execution, any of the reference levels, again, we have kind of updated this. It's been a week or two since we've updated the table legend and references, as well as just continuing to monitor the posture ideas level with the date that we have next to it. So again, when we highlight these, like we have now here today, we have 3 things highlighted. That means we changed the posture level and then obviously updated that change with the given date that it was changed on. So like this morning, long short posture level in Bitcoin, we changed to 60,500. Again, today is October 7th, so that date corresponds with the given number change. Just this afternoon, came in and changed the NASDAQ and the S&P 500 posture levels. So those numbers will be changed as well as the date here for October 7th. So a nice little feature add over the last couple of weeks that we've been doing. And we'll continue that. We have about 3 contracts left that we have not changed here for a little over a month here. One of those being the Euro, another being the Russell 2000, and then finally the feeder cattle market. If you have any questions on anything on this sheet, please do feel free to reach out. We lean on this sheet in the office here quite heavily for idea generation, for trade recommendation and trade idea generation, I should say, and really like to use that for just a quick snapshot of where these markets are potentially at and what levels we like to care about overall. Getting into the charts here now for us. The first chart that we're going to run through here is that Russell 2000 here. And I'll just make this chart a little bit bigger for us to see. If I can get that up here. There we go. That's better. There we go. All right, so with the Russell 2000 here, continues to get very tight, continues to get very coiled here. I'm just going to bring a 3-year weekly chart in just so it's a little bit easier to, that's much better, from that weekly just to show. Again, you've heard us talk about it before, but this contract continues week after week to really get tight and coiled in this consolidation, and continues to build out this high volume node. Really the biggest point of this high volume node is around the 2230 to 2240 range. We currently sit at 2248, right around that 2250 zone. When I get to the daily or back to the daily chart, you'll see this really tight wedge forming here. We're going to want to be buying or selling the break of that wedge, and again, I'll show that much more clearly on the daily chart here as I go forward. But understand that we're still in this sideways consolidation action. We're building out volume here and building out profile and building out, at the end of the day, value in this area. I do like to see the last 3 weeks here with more of this bottoming action that's coming in, leaving longer tails. We'll see how tomorrow comes in with just the close of this week. Lesser volume this week so far. Last week, end of the quarter and end of the month for September, so you likely see a little bit more volume coming in there on that weekly candle. But I also think last week is a very good trigger, a trigger for a trade, again, to the breakout or the breakdown of that high or that low. Whatever way we end up going there is really going to be likely the direction that takes place out of this. And again, we're still very much in the ball game of following this to the top side. So when I talk about this nice tight coiled action coming in here, we want to be following the break either to the top side or the downside here, and targeting the corresponding levels. Downside 1 reference level at 2110 here as at first note. Second note here down at 1972, it's a high volume node area. that would be kind of our last target in terms of a breakdown. And then to the top side, of course, we have our first target of 2,400. And then above that, we have, I mean, the sky is the limit. We have another count upwards of 2,800, but we would not expect to see that for quite some time here. And we have a lot of work to do until we even come close to talking about that. But nonetheless, here, as we come in and try to break outside of this range, use this coiled action to your advantage. We're going to be using it to our advantage. We want to be using the high of last week to really, if we're breaking higher, that could be an activation. Use it as more of a buy stop, if you will. And then conversely, coming into the low of last week, this candle here, right there. If we break below that, that's a pretty good confirmation that they are going to try to send this thing lower and go test likely downside reference 1, and then we'll see if they have any more power to continue pushing after that. If you have questions on that, this is a very interesting setup that will probably in our eyes resolve itself into Q4, and maybe even it might even take into the back half of Q4, but we do believe that in Q4 21 we will break out of this range here. At the very least, the beginning of Q1 2022. So that gives us about what 3 to 4 months here to kind of get ready for this. And if it happens next week, we have to be ready for that and prepared to act. Next chart we'll run through is that December corn chart. Going to bring it out to a 3-year weekly chart here. You've seen this plenty of times here, so I don't want to continue to beat the drum here, but the fact remains is that we continue to center around this VPOC in December 21 corn. That VPOC on the weekly chart is at 547.25 level. I think it's interesting to note that the last 2 weeks now we've had the highs come in and really test that VPOC. So as positive as this contextual picture looks, it does look like we need more time in and around this lower end of the really balance area here that we've built out. So until we can really break above that, this is really the ball game. And if you paid attention last week, our expectations is just continuation of trade in and around number one, that VPOC, but more importantly at the bottom half of this consolidation zone on this weekly chart. And use obviously downside reference 1 of 507.5 and then downside reference 2 of 477.5 to kind of give you perspective to the downside. To the top side, first things first is we got to get above the VPOC here, and then you start to extend and have a better likelihood of getting upwards of $6.0607 there. So keep those numbers in mind, keep those numbers handy for you. That's again the weekly chart. I'll bring it back into the daily chart for you here. We have a little bit of yesterday's candle certainly wanted to we had a test higher and they reversed it lower, so the rollover effect was certainly in play here. And they did try to send it lower earlier in the session and they rebounded it nicely. If you notice, this day right here is the report day. It has a high range and a low range, and then just kind of centered in the middle. Very indecisive candle. It's a doji candle at the end of the day when we really take a look at it. And since then, we've traded inside of that day's range. So that report was on September 30th last week. We have not gone outside of that day's range yet here as we sit, 1 week from that? Yep, so 1 week we've been in trading inside of that 1 day's range. So what that tells us here is that you can set, in our opinion, to be active in this market, we need to get outside of that range. You can put sell stops at the low here for a trade under 527.25, and then you can put buy stops to the high end at that 548.5 to 549 zone. So use that September 30th day, the highs and the lows to your advantage. Everything inside of here is really just back and forth noise, if you will. Makes it really tough to trade that thing inside of that daily range. So if we're inside of that day's range, we don't want to be a part of any trade. If we're outside of that range, you're likely going to see us, putting on a trade and trying to do something there. Next chart, we'll run into that meat market here, specifically talking about December lives here coming in. And the biggest thing we'll kind of run through here is I first want to get us out to that weekly chart here. As you've really seen that shut off now. So we had a few weeks, 1, 2, 3, 4, 5, 6 weeks, month and a half down since really this topping tail that we saw, back in the end of August. And now, as they migrated, as they traded this, really settled in right around this VPOC. They give a little bit more test of a low here last week, but has since, really reversed course. So on a weekly perspective, this is certainly a good start from a weekly chart to really shut off this previous downward move. And now we can set the stage to see, do we have enough momentum to go test the top side of this range, and can we build out more of a sideways positive bullish continuation pattern here in live cattle off that December chart. Coming into the daily chart here, you do have a close here today right into that 63-day EMA here. It looks like they tried to test just above it here on the intraday basis, but closed just below it there. That is currently sitting in at that 130.10 level. We closed, it looks like, at 130.05. So that's really your key. You could even argue the high of this day here on September 14th at 130.45 is another, key hurdle. But the point remains is that we're coming into a very key and critical level here. You have, a lot of inflection point coming in here back in June and July lows that center around that 130 to 130 30 zone. Obviously the inflection point that I just mentioned on September 14th, and now another inflection point with today's trade. So a very, very key, horizontal inflection point, if you will, right around that 130 to 130, 130.30 level on that. And we even have another one back here that I didn't mention previously back in May. So if you want a very key inflection point for this chart, we got to get above this zone to really go attack this high volume node. You're currently in around the 38.2% retracement. A 61.8% retracement would get you up into that higher volume node there. And we'll really see if it can do that, number one, and really how many more legs can it really power through further to the top side there. In our opinion here, technically, we're really just watching these retracement counts for right now. We believe that we'll continue to kind of keep somewhat of a magnet around this VPOC. Sure, we can extend higher into the upper end of this zone, but for the most part here, we do believe that in terms of trending extension, even going to attack new highs is a little bit more on the low probability spectrum in our eyes for the time being until we see more proof that we can get away from this VPOC here. And again, that VPOC currently sits right at 128.50 on that December live cattle chart. So kind of keep that in mind for you as we trade out here throughout the rest of the month of October. Next chart we'll run into is that natural gas market here. Going to try to get a weekly chart for you. This is one to really pay attention to here. We are coming into some big levels here on the long-term charts. We've been really into those levels for the last few weeks, and it's been a tough trade for both the long side and the short sides the last couple weeks. Yes, we've been continuing to kind of milk higher, if you will, but overall, it's been a tough trade to be long and a tough trade to be short. They've almost been very quick half-day trades, even less than half-day, if you will, on that front. But we're coming in and looking at this 2013-2014 high right around that 650 zone. We have a high coming in here now this week of 646.6, so right in there next to that previous high back a few years ago. We also have Another thing we're looking at in terms of just kind of signals that justify some caution if you're long, and justify some ability to say, hey, maybe let's start thinking short. Let's start getting maybe some positions on short, whether that be from a conservative delta standpoint or some sell stops to get you engaged on a futures. But just one thing to look at here is, as I erase our drawings here, is the 3-month volume profile here, the previous 3 months that we had. So notice the shape of the profile. It looks it's B-shaped, B as in boy shaped. You have your volume point of control right down below here at the just below $4, and really that volume point of control is right at that 397.5 zone. So what that means to us is, as I kind of redraw this here, but what that means to us, you have a B-shaped profile. It's getting very thin as you go higher in price here. Like, just notice how thin the volume profile is looking. So your market participants are not coming to the table and just transacting up here. So it either has to do one of two things, and we've mentioned this before. You've probably heard it many times. Is we have to either correct through time or through price. And if we correct through time, that would mean more consolidation up here, back and forth. But if we correct through price, we could see a sizable downward move here to $4 or lower, and really settle into that volume point of control from that last 3-month period. That is something that we are watching quite intently there from a contextual standpoint. This is a very good setup. If you notice, we had the same type of setup coming in late 2018. Notice this B profile here. You had a spike high, and then they really just shut this thing off, and it actually shut it off for quite some time, for the next really 2 years almost, and that ended up being the high for quite some time there. Something we're going to be watching again. We don't know if this is going to be the high, how long it will be the high if it is, but the point remains is that we have characteristics that are showing us to be quite cautious here, to extend longs, and that we want to be looking more to the short side here. Another point being is that we have 2 or 3 bigger tails coming in off of these weekly charts. So that is certainly something that we'll be paying attention to coming into tomorrow. If we close lower on the week, so the open on this week's candle is 562.8, and we're 575.3. So we're right there. I mean, if we close lower than where we opened the week at, that will be a trigger to say, hey, this auction, this market has a very good potential to start tipping over here, and follow through to the downside, and start to see some risk off behavior in that situation. Conversely, if this thing just gets really wild and crazy, if you're starting to look short and want to be short, really you have to be comfortable risking the highs. Whatever you're doing in this, you have to be comfortable risking that 650 zone. So if you can, be our guest. If a dollar to 75 cents is too much risk, which it is a lot of risk in a natural gas market, then look to go towards more of a more conservative delta position. Then that's protected, and that you can kind of understand your risks involved with that position, rather than just a simple short futures at that point. So a lot of talk in there on the weekly chart, but a lot of good information in our opinion to kind of look for and to watch for here in this natural gas market. The daily chart here, so I just got done talking about that 3-month volume profile that was more B-shaped here, and this is the daily chart looking of it. Call it L-shaped, B-shaped, same significance at the end of the day. It's that value is down below here, and it's getting very thin to the top side, and then that's something that's a clue for us here. We'll again continue to watch this. If we take out, like I said, if we close below the week, below that 563 level, I believe I said, we'll be looking very aggressively. And if we trade below today's low is 539.3. That will really start to activate the selling, in our opinion. So that's 2 levels now to be aware of. That'll really start to activate the selling to where, in our opinion, we can go test this low here. That low is coming in and sitting right around that 478 zone. And then really below that, we have that higher volume node down around the lower $4 area. So a lot of steps, a lot of different numbers I threw at you, but two numbers I want you to follow along with us, at least for right now, is that the close of this week is either above or below the week's open. So right around that 560, 562 area, I believe. And then also today's low here of 539.3. Be writing those down if you would like to trade this natural gas market here. And the last chart we'll run through on the session is that silver market. Silver actually not having a terrible week here, just contextually speaking, the last couple of weeks. We're starting to really come in. Apologize for the green bar coming across the screen. I have yet to figure out what the reasoning is for that here. But what we're seeing, I want to point out last week's candle here. Some good follow through action back into to this channel or to this consolidation zone. So in our opinion, if we can hold in here and hold that week's low, which we believe we can, our ability to rotate back higher, back above $23 and into $24 becomes very, very high, and we believe that chance is here and now, and it's likely to occur here over the next couple weeks. Higher volume node coming in up above around that 2620 level. We don't believe we can get that quite yet, but that is certainly one thing we'll be looking for. If we can get in first to $24, that would be certainly a level that we follow through to next. Also notice RSI not measuring below 30 and actually sitting right in around that 40 zone. That 40 zone is a great level and a great area for us to look for reversal type areas within an ongoing trend. So again, we fully do expect this rotation back into the middle of this range, and we do believe, sold puts spreads. If you're willing enough to go futures, let's figure out your risk parameters and try that for you. But that's a nice situation where we're testing the bottom end of this range, and you have some good risk reward characteristics and risk reward ratio to your favor, really, that gives you that ability to trade that. And then coming in here on the daily level, or the daily chart I should say, here's that spike lower, and then we popped right back out of it. So what it's doing now is it's actually consolidating. We've consolidated for about 4 or 5 days actually, and in our opinion, if you simply wanted to just use a buy stop above today's high is 2284. That would be a very, very simple way to get activated and to get pushed into this market should buyers start to show up. It's a nice way, a simple way to not really front run or try to outguess this market. If for whatever reason our analysis does become incorrect and our theory of rotating higher becomes incorrect, and we start to rotate lower and back through to test this low, using a buy stop can leave you out of some of those markets. So we suggest if you do want to go with the futures route, use that buy stop to your advantage, and use the today's high, a tick or two above today's high. Have it put you into this market via a buy stop and targeting this price right here, which again is that 2380 level. Higher 23s into almost 24 is really going to be that first target for us upon that trade. And as of right now, contextually long term, of course, you have a bottom end of the consolidation that we just got done talking about. But on a daily time frame, you are looking at more of that counter trend type of trade here, where you want to be quick to the trigger and you want to be a little bit more quicker taking profits at that point. And with that here, that will wrap up the session for us in terms of just that contextual view, looking at a few of our charts, progression of charts across all different spectrums. We want to thank you for participating with us here today on October 7th, 2021, episode 10 here. And really, if you do have questions, on any of the charts we go over, any of the mechanics we're using, the Quicksheet, or anything that we cover here, do feel free to reach out to us. We're more than willing and more than happy to walk you through that. We put a lot of time into this, and we hope we hope you put a lot of time into this too, because it does take a team effort. If you do want to kind of be successful in this venture with us, it does take a team. The team being us, and then the corresponding team member would be you. So we do want to leave that door open for you to ask any questions at all times. With that here, I will close with a disclaimer. Past performance is not indicative of future results. Futures and options trading involves risk of loss and is not suitable for all producers and/or investors. This is a solicitation. Again, thank you for participating, and have a great afternoon. If I don't talk with you here, have a great weekend as well.